now we're going to go over the application. So yeah, I'll hand it off to Ezra.
Thanks, Natalie. So now, yeah, I'm going to go over some of like the key applications and happenings in DeFi that make it like usable. So we're going to go over stablecoins, DAOs, or decentralized autonomous organizations, some exchanges, money markets on DeFi, and then NFTs and the concept of digital ownership. So as Natalie mentioned, like the introduction of smart contracts allow for code to be run on a blockchain in a decentralized way. And this gives us the very powerful tool of programmable money. So money can be transferred, unlocked upon certain conditions being met that we ourselves can program. And that's kind of like the whole concept of DeFi. So the first key element of DeFi I'm going to go over are stablecoins. And stablecoins are very imperative to doing finance on the blockchain. Now you may have heard of crypto assets like Ethereum or Bitcoin. And the value of these assets are highly volatile, and like they change quite frequently with the market, and like they're only worth what the market dictates they're worth at like any given time. So like one day, like today, Ethereum's around like $4,500, but you know in the future it might go up and down. Like just a year and a half ago, it was maybe like $100, right? So imagine you're trying to like pay for something or save money or loan someone money and expect them to pay it back. It's tough to do with like volatile currency. So stable coins, they're important because hence the name, they're stable, and they provide like a utility, like an asset to pay with, transfer, or just use in smart contracts in general. And so with a stable asset, more people are going to be able to use like these financial services that are built on blockchain. And even like one very simple use would be like sending money to someone else, like across like a border. Like if I had like a relative somewhere else and I didn't want to go to the Western Union, or if I didn't want to like initiate a bank transfer that would take 3 or 4 days, I could instantly send them like money on a blockchain for like very little fees, depending on what blockchain I used. And then this stable coin is always going to remain stable. And there's many types of stable coins, right? There's fiat collateralized, algorithmic stablecoins, crypto collateralized, commodity backed, and there's also central bank digital currencies. I'm only going to go over a couple of these for the purpose of this presentation. But the first one, it would be like fiat collateralized stablecoins. And fiat collateralized stablecoins are tokens that like are minted or issued by usually like a large financial institution. And this institution theoretically has a bunch of US dollars as reserve for each stable coin that they issue. And at any time, users could be able to swap their stable coin 1-for-1 for the US dollar or any fiat currency that they had decided to issue as a stable coin. So like, so there's, some examples. We have like the Gemini dollar. Gemini is like this big crypto exchange, and they have decided to like issue their own stable coin to like bring more people into their ecosystem. So for every dollar they have in reserve, they can like they will like mint a new coin on the blockchain, and people will deem its value worth $1 because at any time with that GUSD coin, Gemini gives you the guarantee that you can give them back the coin, they'll give you like $1. And similarly with like USD coin, I think Center or Circle was the company that issued USDC, which is this like the blue one, and Tether is another like a big institution that issues stable coins based on the US dollar, or I think euro or other currency as well. So that's how like those stable coins are able to maintain a peg and like always stay consistent with like a real world asset. And of course you can also have like gold backing like a stable coin, as long as that entity that issues the coins, they have like enough reserve of whatever commodity. Then there is so the second type of stablecoin I'm going to go over is crypto collateralized stablecoins. So these are stablecoins that are instead backed by cryptocurrency, such as like Ethereum or Bitcoin or any other cryptocurrency. And instead of someone trusting an institution to maintain the value of that cryptocurrency they issue, these stablecoins are instead issued like automatically through the use of smart contracts, like entirely on the blockchain. And so like basically it's backed by debt. It's backed by like a loan. So if I had like Ethereum, I could give my Ethereum to this smart contract, to this piece of code, and I would send it, I would send it on the blockchain, and then the protocol would give me back DAI, which is a stablecoin that's pegged to $1. And if I want to get my underlying collateral back, I can just repay my DAI to the contract, and then it would give me my my collateral back. But since crypto collateral are like highly volatile, like I was saying, like how Ethereum is highly volatile, like the smart contracts that issue these loans, like they require over collateralization to be able to borrow. And that's just because like if the value of my collateral dips below the amount I took out for a loan, then they can now liquidate me, because otherwise that would be like giving me free money. So if the asset backing the loan drops too much, the borrower can be liquidated. And the protocol like maintains the peg to the US dollar by increasing or decreasing the interest rates it charges the borrowers, to either encourage them to pay back the loans and decrease the supply of DAI, that the stable coin right here, or the other way around, to increase or decrease the price. And like these are pretty neat because it's like entirely decentralized. There's like, it's all just through the use of code that kind of like issues these coins, maintains the peg, and it's like always transparent. Like you can totally see the amount of DAI being borrowed, the amount of like stable coins being issued, and usually they're always like over collateralized. So now, oh yes, that's like that's what kind of stable coins are, and they allow coins that are pegged to like a real world asset that we can use on a blockchain for uses like in DeFi.